I'm Daniel.
I'm Mira.
And it is Sunday evening, June 25th, 2026.
Yes, Sunday night, the calm before the bell.
Exactly. So our goal today with this deep dive is to really help you figure out the macro backdrop as we head into this new week. We're going to analyze this, honestly, pretty wild tug-of-war between geopolitical risks on one side and, massive Federal Reserve policy uncertainty on the other.
Right, because there's a lot of noise out there right now.
There really is. But before we get into the weeds, we just need to clearly state that this show is for market context and discussion only. It is absolutely not personal investment advice or, a recommendation of any kind.
Yeah, strictly educational.
I know, so let's kick things off with session one. And the question we have to frame this around is, what exactly moved the markets over the past week?
Yeah, that is the million-dollar question, right? Because the price action was just incredibly messy.
It was all over the place.
Right, and I think you really have to view it through that tug-of-war narrative.
Yeah.
We've got this equity logic chain where, on one hand, we actually saw slightly lower immediate geopolitical risk.
Which naturally pushes oil prices down.
Exactly. But on the other side of the rope, pulling back hard, is this extreme policy uncertainty from the Warsh-era Fed. I mean, they are holding rates steady at 3.5% to 3.75%.
Yeah, and flashing some very hawkish signals while doing it.
Very hawkish. So the equity markets are just caught in the middle of these two massive opposing forces.
And you could really see that tension in the equity price action this week. I mean, we had that brutal midweek slump.
Oh, yeah, where the S&P 500 dropped down to, 7,400?
Yep, 7,420. But then it managed this pretty impressive rebound to close at 7,500.58 on Thursday. And remember, that was right prior to the Friday cash market holiday.
Right. The shortened week always adds a bit of weirdness to the volume.
For sure. And we saw similar action elsewhere. The Nasdaq ended up closing at 26,517.93.
And the Russell 2,000.
The Russell finished at 2995.60. But the volatility was the real story. The VIX spiked all the way up to 18.44 midweek.
Which is a pretty sharp move.
It was, but then it just compressed right back down to 16.40 by the end of the week.
So equities were volatile, sure. But if we're talking about the most aggressive moves, we have to look at the U.S. dollar and commodities.
Oh, absolutely.
I mean, we saw this fierce rally in the U.S. dollar index. It shot up to 100.85. And, we've talked before about dollar strength as imported inflation for the rest of the world.
Right, it just squeezes everyone else.
Exactly. And that surging dollar basically forced massive liquidations across the commodity board.
Because everything's priced in dollars. So when the dollar spikes...
WTI crude absolutely collapsed. It fell to $76.60.
Wow.
Yeah, and gold had a violently sharp reversal, too, dropping to $4,224.10.
Okay, but this is where I really have to push back a little bit on what the market is doing here.
Okay, let's hear it.
Are markets just being way too complacent right now? I mean, it feels like traders are pricing removal of immediate tail risk almost too perfectly.
Do you think they're ignoring the diplomatic fragility?
I do. Look at the bond market. With all this cross-asset turbulence, with equities swinging and commodities getting crushed, the bond market was totally insulated.
It's true. Treasury futures were incredibly calm.
Right. The ZN contract ended at 109.33. And credit spreads, looking at high yield and investment grade corporate bonds, HYG and LQD, they closed completely flat. It's like the fixed income market just didn't care.
It is a bit unsettling when the bond market gets that quiet during a storm.
Exactly. So just to wrap up session one, we saw equities whip around but ultimately hold ground, the dollar wrecked commodities, and the bond market essentially took a nap.
Yeah, that's a pretty solid summary.
We're going to take a really short break, and when we come back, we are going to unpack the absolute chaos that hit the weekend newswire.
Stick around.
All right, welcome back.
So reopening here with session two, the big question we need to ask is, how did the weekend news alter our macro landscape?
And to answer that, we have to set the baseline context. Basically, what is the market operating against as we open on Monday?
What's on the radar?
Exactly. And looking at the Watch Next radar, it's really all about Thursday's upcoming PCE inflation data and Micron's earnings. That is the underlying baseline. Every piece of weekend news is going to be filtered through how it affects those two things.
Which brings us to the core focus of the weekend, the absolute drama going down in the Strait of Hormuz.
Oh, man, the Switzerland negotiations.
Yeah, so we had these high-stakes negotiations between the U.S. and Iran happening in Bergenstock, Switzerland. Yeah. You've got U.S. Vice President J.D. Vance and Iran's Mohammad Bagher Ghalibaf leading the talks.
And the contradictions coming out of this were just jarring.
Beyond jarring, you had Iran's military publicly declaring that the Strait of Hormuz is completely closed to all ship traffic.
Right.
They claimed it was due to U.S. bad faith in the talks and ongoing ceasefire violations in Lebanon.
But then, literal hours later, the physical reality on the ground was completely different. The U.S. Central Command comes out and totally refutes the closure.
They actually tracked the ships, right?
Yeah. They confirmed that 55 merchant vessels safely transported over 17 million barrels of oil right through the strait.
So they just sailed right through while the military was announcing it was closed.
Exactly. But honestly, I look at that and think, how long can we just expect physical flow to ignore direct military declarations?
Well, let me challenge that reflex for a second. We tend to treat these geopolitical flare-ups like they're unpredictable natural disasters, right? Like a hurricane hitting the market.
Sure.
But if you apply a game-theoretic lens to this, it makes perfect sense. Iran's declarations and even Donald Trump's threats about imposing massive tolls on Hormuz traffic, it's all highly calculated.
You're saying it's just posturing.
It is classic geopolitical brinkmanship as bargaining leverage. They are trying to squeeze out every ounce of leverage right before they finalize those 60-day sanctions waivers.
Ah, okay. So it's loud rhetoric for the negotiating table, but they don't actually want to stop the oil money from flowing.
Exactly. The physical reality of the oil flowing always overrides the geopolitical rhetoric.
That makes sense. But the rhetoric is definitely heating up elsewhere, specifically with the fragile Lebanon truce, which effectively collapsed over the weekend.
Yeah, that situation deteriorated fast.
Over 50 projectiles were fired by Hezbollah, and then the IDF immediately retaliated and publicly committed to staying in the southern Lebanon security zone.
Which completely changes the diplomatic calculus for the whole region.
It does. But let's connect some of these other global quick hits to the broader puzzle, because there was a lot happening.
Starting with UK politics, I assume.
Yeah, there are all these rumors swirling that UK Prime Minister Keir Starmer was going to resign in favor of Andy Burnham.
Which would have been a massive shock.
Huge. But government sources forcefully denied it. So for now, that keeps G7 political instability at bay.
Thank goodness. And then we had a scare with energy infrastructure in the Middle East.
Right, the explosion at Qatar Energy's Barzan gas plant.
But thankfully, it was contained without any leaks. So we avoided a severe LNG supply shock, which is huge because the energy market is already so tense.
And speaking of tense, let's talk about the nuclear tail risk in Europe.
Oh, Ukraine.
Yeah, the Zaporizhzhia nuclear plant finally restored its power. But Mira, this was following its 20th emergency outage.
20th. That is just staggering. It really is this constant hovering tail risk that the market just tries to ignore.
Truly. But let's end this session on a positive note for the markets, particularly for mega cap tech.
The Apple ruling.
Yes. A court ruled that Apple's Siri did not violate Zhao Core's patents.
Which is a massive win. It removes a huge legal overhang, and it just plays right into that theme. We always discuss mega capex as a market fragility mask. As long as these tech giants are clear to keep spending and building, it kind of masks the vulnerabilities elsewhere.
Absolutely. So to wrap up session 2, the weekend showed us that physical reality, like oil actively flowing, is overriding the scary geopolitical closure threats.
The world keeps turning.
It does. We're going to take another quick break, and then we'll look at the calendar for the week ahead.
See you in a minute.
And we're back. Moving into session 3, let's ask the most practical question for you listening. What do we need to watch in the coming week?
Well, strictly deriving this from the what next radar, the calendar is pretty stacked.
Let's run through it.
Tuesday, June 23, we get the U.S. S&P Global Flash Manufacturing and Services PMIs.
Always a good pulse check. Then Wednesday, June 24, we get the May U.S. new home sales data.
Which is super important for gauging consumer strength. But Thursday, June 25, Daniel, that is the absolute main event.
The big one.
We get the May PCE and core PCE price index.
And for anyone who doesn't crack this daily, the PCE is the Fed's preferred inflation measure.
Yeah.
It is the absolute key read for where rates and the U.S. dollar are heading next.
100%. And on top of that, Thursday also brings Q1 final GDP, durable goods orders, personal income and spending, and weekly jobless claims.
It's a massive data dump.
It really is. And then finally, on Friday, June 26, we rounded out with the University of Michigan revised consumer sentiment and inflation expectations, plus the May wholesale inventories.
So it's going to be a heavy week.
It is. So as you go to set your Monday morning alarm tonight, make sure you quickly check your phone to see if the Strait of Hormuz is officially open, closed, or getting told today.
Right, because who even knows at this point?
I mean, dropping oil prices and skyrocketing geopolitical blood pressure was exactly the relaxation you needed before facing a hawkish Fed,
Oh,
right?
absolutely. The perfect Sunday night.
But hey, at least your mega cap tech stocks are safe, even if the Swiss treaties are hanging by a thread. So pour a drink, make sure you aren't mediating a Middle East ceasefire in your sleep, and brace yourself for Thursday's PCE.
Great.